You didn't lose money on that stock. You made money. That's the problem. The small win taught you to exit too early, and the big one never came. Think about the last time you sold. It was up, maybe 20%, maybe 40%. You felt it, that pull. Take it before it disappears. So you did. Felt smart, felt in control. Then you checked it 3 months later. It was up another 80%. You didn't make a bad pick. You made a good pick and left before it paid. That's not a mistake you can see in the moment. It feels exactly like discipline. Peter Lynch ran a Magellan fund for 13 years. Average return, 29% per year. He didn't do that by finding stocks nobody else could find. Most of his biggest winners he almost sold. Fannie Mae, Ford, Chrysler. All of them looked like they'd gone far enough. All of them had more left. What Lynch understood that most investors don't is a stock that doubled isn't a reason to sell. It's evidence that something real is happening. But your brain doesn't process it that way. Your brain processes a gain as something to protect. The moment you're up, the fear shifts. Not fear of losing the original money, fear of losing the profit. And that fear is what exits you too early, every time. Lynch called them 10-baggers. Stocks that go up 10 times, not in a day, over years. Here's what most people don't realize about a 10-bagger. At some point, it's a 2-bagger, then a 3-bagger, then a 5. Every single time it doubled, it looked like enough. Every single time, someone sold. The investors who caught the full move weren't smarter. They weren't better at reading charts. They just had one thing the others didn't: the ability to stay uncomfortable while the number kept moving. Because a stock going up doesn't feel safe. It feels like pressure. What if it comes back down? What if I give it all back? That pressure is what Lynch was trained to ignore. Most investors aren't. So they take the 30%, and they watch someone else take the 300%. Here's what that pattern costs over time. Not in one trade, in every trade. You build a habit of small exits. Each one feels responsible. Each one locks in a gain. But across 10 years, you've collected dozens of small wins and missed every large one. Your portfolio isn't full of bad decisions. It's full of good decisions that stopped too soon. Lynch's real insight wasn't about picking stocks. It was about understanding what happens after the pick is right. Most people think the hard part is finding the winner. It isn't. The hard part is holding it while everything in you says sell. You didn't lose because your picks were wrong. You lost because your wins were too small. Not because the stock didn't move, because you moved before it finished. Peter Lynch didn't win by knowing more. He won by staying longer than most people can tolerate. That's the whole system, and it's available to anyone. The question isn't whether you can find the right stock. It's whether you can hold it when every instinct you have says you've already won enough.